Hey, what's up guys, welcome back to the channel. In this video I want to go over my green hydrogen and fuel cell stock portfolio to give you guys an understanding of which stocks could actually thrive and take advantage of the massive growth opportunity we're expected to see in the hydrogen industry this decade. Because there's a lot of different companies out on the market like Plug Power, Nikola, Ballard, and Bloom Energy that makes it very confusing for new investors to understand which technology is suited best for the future of this country. And since even the financial community is starting to take hydrogen technology very seriously, as seen by the very newly introduced HYDR ETF, we are seeing a lot of different companies come up for grabs to gain that investment and institutional backing, as can be seen by the massive top holdings list of this specific ETF. And so in this video, I'm going to clear up exactly that. But as usual, before we get into it, guys, make sure to drop me a thumbs up and hit that subscribe button if you haven't already. So the first thing we want to address is, why is green hydrogen even on a radar for a retail investor? Because this technology is historically known to be very high capex, and it's known to be a buzzword, meaning that people bring up hydrogen to create hype around different stocks. Well, as we've seen over the past couple of years, this is simply not the case. We are seeing big corporations, especially in the oil space, really make significant investments in green hydrogen, because realistically, green hydrogen fuel is the only way that major corporations like Chevron, BP, and Shell can decarbonize their operations, because hydrogen helps us essentially pair renewables like solar and wind to natural gas, which is obviously the forms of fuel and hydrocarbons that we use on a daily basis in gasoline, methanol, and ethanol. And so there is a big opportunity for these oil companies to be able to transition to that. And it can be the only technology done using green hydrogen fuel. And even big businesses like Bosch, who are massive OEM suppliers to different fuel cell and electrolyzer components, are investing massively in green hydrogen and fuel cell companies. And we're starting to see even OEMs in the automotive industry, even though we know that the main advantage that fuel cells provide to the auto industry on the long haul sector, we're still starting to see these companies invest in green hydrogen for fuel cell cars. Because as the costs come down, there's going to be a very nice transition towards the green hydrogen sector. And I think that is going to push towards reduced fuel prices and increasing the value proposition of a fuel cell vehicle like this one. But regardless, let's now look into these stocks that are going to take advantage of this massive transition towards green hydrogen. Obviously, the first company up here is Plug Power. Now, I've already talked about this stock on this channel a lot because this is one of my biggest positions due to its leadership in the sector. But obviously, for some people, the valuation is still a little bit pricey at around a 16 price to sales ratio. So if you're looking at other stocks in the space, which stocks do you pick, and how does Plug stack up against those competitors, and could they be a big threat for this company down the road? Well, the first one up here we have is BLDP. Now, this is a company I'm sure you guys have heard of. This has been the biggest fuel cell manufacturer for the light and heavy duty transportation space. This company essentially sells massive fuel cell modules instead of simply electrolyzers towards the fuel cell industry. And because of that, as you can see, they are trading also at a pretty expensive valuation of around a 17 price to sales. As you can see, these guys essentially sell heavy duty modules for marine systems and fuel cell stacks for stationary power. And so this is a pretty well diversified business from the get-go. But the main concern from this business is that their cash position is not the best as compared to their competitors, and also their revenue growth has not been as astounding as some of the rest of the sector. Because as you can see, their revenue growth over the past year has only been 19%, whereas Plug has grown by over 95%. And even if you compare it to another competitor, which is FCEL or Fuel Cell Energy, this company, for example, grew sales by 17%. And this company is significantly smaller than Ballard Power. And so you would ideally expect Ballard to grow revenues a little bit faster. But as you can see, that is simply not the case. And right now, Fuel Cell is trading at the same valuation as Ballard Power. But apart from just their fuel cell business, the bigger problem I see with Ballard in the long term is the fact that they don't really have an electrolyzer business or a liquefied green hydrogen business like Plug Power, which should allow them to bring down the cost and improve their profit margins over the long term. As you can see right now, their customers are primarily in the transit bus, the light rail, and the trucking and automotive industry right now, with obviously also Plug Power being one of those customers because their material handling trucks actually utilize some of the gen drive systems that Ballard Power sells. And following that, there's also a bunch of different strategic shareholders that own equity in Ballard Power. But apart from that, the longer term growth opportunity behind this company is only going to be realized effectively as compared to the competitors if there is a moat around the business. And at least right now, these guys do have some very significant patents. But again, these patents are only in the fuel cell module and the fuel cell system space, which is already starting to get a little bit more competitive, as you've seen even somebody like Plug Power get into the business of manufacturing everything in-house. And if you bring in the fact that green hydrogen itself is probably the biggest investment opportunity, as oil companies like BP, Chevron, and Shell and Bosch are also investing millions and billions of dollars into this industry, it really goes to show that the growth opportunity is only going to be realized for Ballard if they invest seriously in a new business segment. Because right now their fuel cell business is growing very slowly as compared to somebody like Plug. And because of that, even though Plug is trading at an expensive valuation, when you compare to somebody like Ballard, which is trading at a price to sales of 17, this valuation for Plug is not that expensive, even though this company has a little bit of a stronger balance sheet, meaning they have a lot of cash and very minimal debt for the long term. But now this brings us on to the second competitor for Plug, which is FCEL. Now this business is actually much different than both Ballard Power and Plug Power, in that this company actually sells a stationary power unit that runs on natural gas and is primarily used for base load power generation, meaning these guys are not selling a fuel cell module to a company in the EV industry. These guys are essentially selling a fuel cell generation device that sits as a stationary device outside a commercial facility or an office space. And so for me at least, that right there has been the main reason why I haven't really considered investing in FCEL, even though I think with the growth in the hydrogen industry, all of these hydrogen companies will succeed, because at the end of the day, this is a critical climate change solution, and every single company that's putting in the effort right now is going to succeed. As you can see, FCEL essentially sells these kinds of units that are sitting next to utilities. And so even though in the short term, the financials and the size of this company is a little bit smaller than I would like to invest in, the company has a very trustworthy customer base, because utilities, independent power providers, and other businesses in the commercial sector are significantly more sticky than somebody in the fleets or the transit sector that someone like Ballard Power is communicating with. And so because of that, there is a lot more revenue assurity over the next couple of years with someone like Plug or with someone like FuelCell here, because that'll help kind of even out the revenue throughout the dips and the rises in the economic times. As you can see, this is essentially what their unit looks like. They have three different units, a 1500 watt and a 3000 megawatt unit, which essentially provides continuous power running on natural gas. And since every facility nowadays has access to natural gas fuel, this is producing electricity with basically zero emissions, which is obviously going to help reduce the carbon footprint for a lot of these industries and decentralize them from the electric grid, which in a country or in a state like Texas has obviously become a pretty big deal over the past couple of years, especially with the fact that solar and wind infusion into the grid has also increased exponentially. So now that we've covered some of the business model related differences between Plug and some of its competitors, how about we look at the financials of these companies? And in this sector, there is a massive commonality between all these different stocks, and this is very bullish. The main thing here is that most of these companies in the hydrogen space are extremely well capitalized. As you can see, somebody like FCEL, which is trading at a market cap of only $1 billion, currently has current assets of almost $600 million, with all their current liabilities, which are debts that are due within that year, at around 80 million. And this is the same story across the board. These companies have a lot of cash with very minimal debt. Now, obviously, in the long term, this could change because these companies also have a very capital intensive business model. But if the management team really understands the benefits of economies of scale and they make sure they leverage partnerships and potentially vertical integration opportunities, then the longer term revenue growth opportunity for these companies is going to be very big. And as the demand for their equity increases, that is only going to further increase the flexibility for these companies to raise even more money from institutional investors down the road. As you can see, somebody like Plug Power itself, which is a much bigger company than FuelCell, also has around $4.1 billion in current assets and only a $358 million set of current liabilities. Even their total assets and liabilities are significantly far apart, which is a very good thing for this company. And even on the income side, although the revenue growth for these companies is very impressive, the key thing to keep in mind that's going to differentiate which one of these stocks is really going to be the big winner in the long term is going to be their gross margins and their operating margin. The gross margin right here, right now, for most of these companies is negative because right now the pricing and the cost of materials has gone up substantially. And the only way this is going to come down is by economies of scale and by pricing power. And that's one of the reasons Plug Power could perform a little bit better in the eyes of Wall Street because they're much closer to getting to that break-even gross margin. And following that, the big thing Wall Street is going to look at is going to be the operating margin, meaning how much money does a company have left after they've covered all their operating expenses and after they've covered the cost of their revenue, which is obviously right here. And so overall, those are my takes on the current stocks in the hydrogen industry. But anyways, guys, make sure to drop me a thumbs up if you found some value in this video and let me know down in the comment section below your thoughts.